And now, ladies and gentlemen, before we kick off the next session, just want to encourage everyone, if you're outside and you can hear my voice, come on in for the last two panel discussions right here on this stage. So if you're out there, come on in and join us. And of course, there's plenty of seats in front. 1, 2, 3, 4. The 4 tables, the 2 rows in front are actually quite empty. So for those of you standing behind, that's right, looking at you guys. The one standing at the back of the room, I'd like to invite you to grab a seat anywhere on the tables in front, all right? Do come on down and join us. And of course, before we begin the next panel discussion, we'd like to remind you to scan the QR code so they can send in your questions to our panelists. Once again, for those of you who are standing in the back of the room, we'd love to welcome you to grab a seat. Plenty of space to sit. If you're outside at the foyer area, we want to welcome you to join us as well, because these are going to be the last 2 sessions before we have our networking cocktail at 6:30 p.m. So fun times ahead. All right, I believe we are ready. Now, upcoming, we're going to be talking about this topic, and the title is Fixing Southeast Asia's Exit Conundrum. And of course, to tell us more about all of that, let us invite our panelists, starting with Saptono Adi Junarso, Senior Advisor to Listing Directorate, PT Bursa Efek Indonesia, of the Indonesia Stock Exchange. We also want to welcome Helen Wong, Managing Partner, AC Ventures. And of course, she's joined by Abhijay Sethia, Chief Strategy Officer, Kredivo. And finally, Patrick Yip, Founding Partner, Intudo Ventures. And helping us to moderate this panel once again is our senior journalist and managing editor of DealStreetAsia, Michelle Teo. All right, Michelle. Looking forward to a very exciting discussion. I'll hand the reins over to you.
Thank you, Wayne. Thank you again, ladies and gentlemen, for joining us this evening for the second last session today. I think we're all here for a very exciting topic of fixing Southeast Asia's exit conundrum. We've been seeing signs of economic robustness, growing demand for capital in high growth sectors, and as well as how much the venture capital and private equity system has grown. But at the same time, LPs are increasingly focused on established relationships with GPs and distributions, prioritizing DPI. So against this backdrop, what we really want to know is what is the outlook for IPOs and other exit paths in Southeast Asia? And I'm sure you'll have lots of questions for our panelists, so please send them in. So we have with us speakers who are representing the spectrum of the ecosystem. Senior Advisor to the Listing Directorate at the Indonesia Stock Exchange, Saptono. Helen Wong, Managing Partner at AC Ventures. Abhijay, Chief Strategy Officer at FinTech platform Kredivo. And Patrick Yip, Founding Partner at Intudo Ventures. So thank you again, panelists, for joining us. So Saptono, we come to you first. No?
Okay.
What can you tell us about the outlook for Indonesia's IPO market this year and further ahead? I mean, we hear there's already quite a robust pipeline. Are you going to be able to hit your target if you have one? Yeah.
Okay, we talk about our IPO for the recent years, right? Okay, let me give you in two-way perspective. Last year's, is quite rough for us because, as you know, Indonesia have an election year, so many companies still wait and see for the not just for the who win the election, but what is the direction actually for the business, for the economic especially. So in first semester last year, we are in most of the company who are listing on the exchange is most is as a medium company. Yeah, it's almost more than 64% is a medium company. Medium is mean their assets is not more than 250 billion rupiah, or maybe in US dollar around maybe 60 to 60 million US dollars. So not many big company filing for the IPO on the first semesters. Yeah. After the election, I think around July, August, and the numbers of company which filing is dominated by the big company. For the first semester, maybe the market size around 23 to 24 billion US dollars. Million US dollars. But in the second semesters, the market size average is around 300 to 400 million US dollars. So you can see, even though the numbers of the company is not big as the first semesters, but the size of the company is getting bigger in the end of the 2004. Those are for the last years. For the recent for this years, yeah, we have maybe not more than a month. We already listed 8 companies, and most of them is a big company. Yeah, so we are very certain that we are great hope that this year's the IPO in IDX will be bigger and better than last year's. I think that's the point that I want to explain. Thank you.
Yeah, so, but if you could help us understand a little bit more on what we can expect in terms of sectors that you think are coming, and what's driving it in that sense.
Okay, you talk about sectors. I think this year's will be not much different comparing with the last year's. The last year's, most of the sectors is, I think, more than 50% is consumer. So I think consumer is a big hit this year's, last year's, and I think if you look up on our pipeline, most of the company, I think 40% is based on consumers. Yeah, maybe consumers is quite various in size, but the numbers is dominated the pipeline. But we hope we have some of the big company. Yeah, we still waiting for the company. They already give their interest to get to be listed this year's. We still, but we hope that a big company will also filing this year's. Yeah, like energy. We all know that this year's is, I think the biggest is start in January is property. Yeah, it's a subsidiaries of the big property in Jakarta. But we hope expected now is more basic materials, or perhaps healthcare. Also, we have some healthcare companies, and also consumer and energy. Yeah, I think those are become the big hit for this year's.
So to what extent, I mean, before we head to Helen and Patrick, does the PE and VC ecosystem sort of support this demand for listings? I mean, after all, it's an ecosystem, not so much a competition, as it were.
Sorry, can you repeat again?
To what extent the PE and VC ecosystem helps to support or drive demand for listings?
Yes, of course. We hope that the PE and VC could help us to. I should say that most of the company who listed the last year's is most a family company, so it's not have a VC or PE yet. So they are preparation is quite challenging for them. So we hope that the PE or VC, which we already invest on them previously, we hope that they could help us to prepare the company much better in case of governance, in case of maybe the operational, and especially for the company in Indonesia, we hope that the IPO is quite sizable. Yeah, so not too low, bigger is better, but not too low. Right. So that's why we hope that for the PE and VC.
Thank you. So Helen and Patrick, maybe to pick up on that, which other business models that you see are particularly suited for the public markets? Maybe Helen?
I think in my experience, going public really means that you have reached a certain scale and you have predictability in your revenues and your cash flow. So that is a bit irregardless of sectors. But I think that if you look at Southeast Asia broadly, what do we have here, right? Indonesia, we have fourth largest, population. So consumer is definitely a big theme. And we have seen quite a lot of consumer companies do quite well. And, Mr. DIY just went public and that was quite well received. So I do think that, consumer, and also we talk a bit about, energy. I think we are also at AC Ventures looking more at the climate side, climate sector, as we do see like things like renewable, electric vehicles being growing and having more importance. So, I mean, those would be some of the sectors that we think could do well in the IPO market.
Patrick, if you wanted to add on to that.
Yeah, I think for capital markets, I think many things affect, the fundraising in the capital markets. I think timing, market sentiments, interest rates, geopolitics, I think that all factors into it. So I don't think, we're one to, pick and choose in particular which sector might be better or not. But maybe as a more general comment, I do completely agree with Helen that I think the governance of the company, I think the preparedness of the company in making sure there's, good corporate governance in place, et cetera, needs to be bolstered. And, I do feel in the Indonesian context, there's a couple of companies that we're hoping that could be a good example of that in the years to come.
Right. I mean, conversely, are there companies, do we see companies staying private for longer in that sense? The opposite?
Yeah, I think, especially on the heels of what we have gone through in the past couple of years. Yeah, I think the choice of staying private for a little bit longer, because, if you go public, you might get punished in terms of the public comps. If you look at drawing comparables from different exchanges and things like that, you might get punished. So a lot of companies are doing maybe internal rounds to maybe sustain the runway for a little bit longer, so you don't get hampered on the valuation. Yeah, I mean, we've certainly seen some cases of that.
I think we'll pick this up a bit later on, but Abhijay, I wanted to come to you and ask really, do you think, from the companies or founders' perspective, do you think companies have sometimes been pressed into an IPO before they are truly ready for what publicly listed entails, what being publicly listed entails?
Yeah, no, that's a great question. So I think if we take a step back, what does a public listing help a company achieve? Right, there's a few things. Number one would be price discovery, right? You have a easily tradable stock price which values your company every day. Number two, you've got a liquid platform on which buyers and sellers can exchange shares. And number three, you've got a vehicle through which you can raise capital. It really comes down to those three things, and that's what an IPO helps a company with. And I think one of the most interesting dynamics we're starting to see in markets like the US, to an extent Europe, with late-stage, large private businesses, is that they're essentially staying private for longer, right, which Patrick alluded to as well. And there are several examples of this. In the fintech space, there's Chime. In Europe, there's Revolut. In China, we've seen ByteDance. But even slightly smaller companies in India. And the reason they're able to do that is because these are companies operating at significant scale, in a lot of cases extremely profitable, There's no going concern risk, and as a result of that, the entire cap stack trades at the same price, right? As opposed to having discounts across your various pref layers. And because of that, it's easy to buy and sell, and secondaries are extremely vibrant in these markets. And that's what's led to a lot of these private companies essentially having all the benefits of a public company without any of the hassle, right? And because the compliance burden in markets like the US is pretty significant, why go through that? And you choose to stay private for longer while your investors reap those benefits. Now, I think when it comes to Southeast Asia and your question to our companies being pressed to go to public markets sooner, that might be the case, but that's also because we haven't seen that volume of late-stage capital here to help companies recycle their cap tables. And as a result of that, what you're seeing is there's two options for an exit. There's M&A or there's an IPO. And again, with sort of the dearth of M&A capital as well, I think IPOs end up being perhaps the only option, and that might be what's leading companies to go out there sooner than they would otherwise happen.
So what do you think can drive these non-IPO parts of, in terms of liquidity events? Maybe Helen, you wanted to?
Yeah, sure. I think, I've worked in the US, I've worked in China and Southeast Asia, right? So even in US market, which was quite mature, you do see most companies actually get acquired rather than go public, right? Going public is really for the crème de la crème. I think China was different because the IPO markets became so hot, and so a lot of IPOs and that was also the path most preferred by founders because you get a higher multiple and you get a lot of the branding that comes with it, so it helps you a lot to attract talent and things like that. So coming to Southeast Asia, I think Southeast Asia is obviously a fragmented market, and so when you think about which stock market to go to. It's especially difficult, I think, if you're a regional company. If you are, say, an Indonesian company, then it makes sense to go on the IDX, right? I would say that IDX, SET are probably the most, most active and most liquid. But if you compare, to let's say India, right? I mean, GDP is similar to India for Southeast Asia, but our equitization, the role that the capital markets play is really quite low, right? So just as an example, in India is over 100%, the capital, the market cap of the stock exchange to the GDP. But in IDX, I think it's only 65%, but correct me if I'm wrong. So I think that is also part of is that the financial literacy here is still low. And so as more and more, young people start to build their wealth, start to invest in stocks, then I think we will see the equitization go up. And that's my hope as well, that we'll have more IPOs. If we come to M&A, then I really hope the conglomerates here will be more acquisitive. I think in the past, when Gojek and Grab had more money and better stock price, we saw them make some acquisitions. I mean, not big, like 100 million odd valuation, but now you don't even see them make any acquisitions, right? So we really have to hope that conglomerates will be more active. I think even in India, conglomerates are a lot more active. And third way would be secondaries, right? Which would be selling to private equity firms. And there is still a lot of dry powder in this part of the world with private equity. Only problem is, of course, they want scale companies, 20 million EBITDA. So we try to play the role of growth capital as well to fill in the gap, help companies that maybe don't have that much EBITDA grow to the stage where either they can be bought out by private equity or they can go public.
Patrick? Add on to that.
Yeah, maybe one more thing. I think on the secondaries, we've seen quite a lot of activity in sort of GP-led. So I think the GP-led landscape, I think last year 90% of them were continuation funds. So I think while it's not a full exit from a company point of view, but it does provide liquidity to to the LPs that were in the previous fund. And I think we've seen some examples of that in the market, a couple of continuation funds. So I think maybe I'll just add that in the context of secondaries.
But to what extent, I was just wondering, the overall fundraising environment impacting exits? I mean, we've been going through this sort of a bit lackluster period for the past few years. Helen, do you want to add on to that first, given the current market environment, what would be the top liquidity options for the venture ecosystem, given the...
Yeah, I think in this part of the world, it's really more secondaries, I would say, that people are looking to as a way to exit, to sell to other private equity firms, for example. I think one is scale, right? Because if you want to have a good IPO on IDX, you need scale, and a lot of companies are just not there. There's a scarcity of large-scale companies. So I would say secondary would be the most common way to go to have an exit currently.
Right. Saptono, I wanted to come back to you. So a quick look. So 2023, for example, was really a good year for tech IPOs in Indonesia. But then a quick look at how they have been, those companies that went public in Indonesia in 2023 and quick in 2022 and earlier. A quick look at the top tech IPOs show that their shares have been trading rather poorly, which then in turn impacts their capital raising further on. So just wanted to hear from you, beyond the IPO event, to what extent can a public listing support a company's continued growth?
Yes, okay. It's a very tough question. I think actually it's not happened just for the tech company. It's happened for all the company. We hope that every company that listed on the exchange have to consider that they have an obligation to their stakeholders, especially for minority investors. So what we do is we are reminding the company that we also monitoring the company, and we give a sanction if we have to for the company that have neglected of their obligation. And we also educate, like Helen said, that yes, the literacy of our investors currently is quite below. But the other positive side is our investors have growth from the last year more than 22%. And from those numbers of investors, more than 40 million investors, 50% is lower than 30 years in age. So it's quite young for them to understand. And that's why I think we start this year, we are educated the capital market in investment, not just for the investors, but also to maybe for the student in the school, to understanding about the investment, the good investment, and to try to get rise and literate much earlier than previously. We have only do for the any investors but we are now more actively to educate to the Indonesian, especially young millennial age investors to understanding and have a better perspective about the investment in capital market. Sometimes Indonesian investors not have any investment plan. They just follow what they are. That's why we have a term like I don't know in English, but kind of influencer. Yeah, they follow the influencer, buy those, and without any understanding why they should buy on one stock or others. So I think those are one of our homework to do, not just for us but also for OJK as regulators, to make a good understanding to the investors about why, how they can choose what kind of stock they want to invest. So there is two sides that our homework, one is supply side, one is demand side, and we are have to have an initiative for both sides. One is encouraging the company and also monitoring the company, but the other side, we also give understanding to the investors about a good investment, and they should not just follow others, but they have their own calculation and how their investment perspective to them before they came to the market. I think.
Right, but what about in terms of the building on the depth of the capital markets in Indonesia, for example, the strength of it with institutional investors, for example?
Yes, I think it's one challenge that we have to do something is how to more attract the institutional investors. Although currently we have currently our TPC currently institutional currently is more than 60%. Yeah, our retail now is around 14%, but it's bigger. Yeah, before maybe 10 years ago. Previously, retail is only less than 10%. But because we already have an IPO system that disseminate distribution of the stock to the more retail, so the number of investors now higher, retail especially for individual is getting higher. But unfortunately, not enough literacy for them, so they just bought without anything about the companies. So what we do is we are meet some of our institutional investors and seeking for what their suggestion, yeah, for us to get them more comfort in investment in Indonesia. For example, some of our regulation still in progress to change. For example, we have intention to get higher floats. We are requiring more bigger floats to the market, and we also have some maybe little bit incentive for the company, which already meet the maintaining the float, yeah, for the certain numbers. For example, give them lower fee or something that gives incentive for the company. I think some of those that we already that we have planned to do that in near futures.
Right, Abhijay, I wanted to come to you again, just to understand from again the company's perspective. What are the factors you think should be taken into consideration when investors are considering a liquidity event, IPO or otherwise?
Yeah, so I think maybe I'll take it from the company standpoint, right? What does it take to really get the company ready if you are thinking about an IPO? And look, it's a deep question. There's a lot that goes into preparing, right? Whether it's finance teams, legal, compliance, tax, corporate governance, HR, systems, processes. But I'll stick to maybe more the commercial considerations from an investor standpoint, right? Given the audience here. And I think number one, before you even go down this path of thinking about public markets, really got to step back and think, is the space in which your company operates, is that space well understood by public markets investors? And this is probably true for the newer age technology companies, where if you are a category defining company, then are public markets armed with the right metrics by which they'll evaluate you? And if they're not, then be prepared to spend a lot of time in the build up to the IPO. And I don't just mean the roadshow, but several quarters to several years before educating investors on what these metrics are, because then that builds confidence with those investors. I think secondly, it also comes down to if you've got comps out there, then how does your company stack up versus those comps? Because guess what? Investors, sell-side analysts are gonna, compare you brutally in some cases every quarter on how these metrics are, and you got to be prepared to answer which of your metrics are good, bad, or ugly versus your peers out there. I think thirdly, as you think about these key metrics and being able to articulate them to the market,
that also goes into providing a forecast. And often in public markets, that's about meeting that quarterly or that annual guidance. And do you have a management team that is marching to that drumbeat of the quarterly beat and raise? And it's important to institutionalize that within the team that operates that well before you go public, and get used to the scrutiny that public markets investors will hold you up to. And then lastly, and this is maybe what I think folks underappreciate, is even if you do all of these things well, and you've got your metrics figured out, you've done the education, you're going into that beat and raise, you can still have a gyrating stock price because macro conditions aren't in your favor, the interest rate environment has changed, there's a macro concern in the countries in which you operate. And the best companies have gone through this. Even the large caps today have seen their stock prices fall by 30, 40, 50, 70, 80% at the worst of times. So in the face of that gyrating mood of the market, are you as a management team able to stay true to your mission as opposed to getting sidetracked by the volatility of public markets? So I think those are the things that we think pretty deeply about as we think about our sort of future plans as well.
Right, but what about if you're looking at a non-IPO path of exit? I mean, just picking up on also what Helen alluded to a certain extent earlier. For example, one founder at least has said that some of the best success stories for startups in Southeast Asia has come from the business being acquired by a larger company outside of Southeast Asia or a particular market, rolled up, and then perhaps gone public in a bigger company, bigger market. Yeah. Helen?
Yeah, actually, on that point, I can maybe add a bit that, recently we've seen some interest from China. So, a lot of corporates from China want to come out to Southeast Asia, and because of the problems at home and, the market is going through some either brutal competition or just, not doing very well. So when they come here, they either, do it on their own or they will look to maybe acquire. I think, the buy versus build debate is always there, right? But if speed and also the, maybe they think the complexity of the markets here may lead them to buy, then, why not just acquire one of these startups that's already built up a business, right? So we do see that. I think, interestingly, I think fintech was a sector a few years ago that got a lot of interest from the Japanese investors, Japanese corporates. So yeah, we haven't seen too many M&A, but I think, investment sometimes is a first step, right, for these corporates to then go do an M&A. So yeah, hopeful that, I think maybe more like regional, like cross-border M&A could happen, and that could help this market to grow for exits.
Maybe now we can take one question from the audience that has come in, which is what key metrics or indicators do investors prioritize when evaluating a company for potential exit routes in the future, perhaps at point of investment, maybe. Patrick, would you like to take this question?
Wow, so hard. I think when we talk about exits, I think we agree. I think M&A or cross-border M&A is very viable. Yes, the Japanese, I think Home Credit was sold, was it 240 million, something like that? I forget the number. But I think my point is that I think right-sizing your ownership in such company at the point of entry matters a lot. So, you either own, I don't know, say 1% of a unicorn or 20% of a $50 million company, it's the same thing, right? So I think right-sizing your investment, being able to have enough reserves to maintain your ownership throughout multiple rounds of fundraising so that, because outcomes aren't going to be unicorn or decacorns anymore, right? So if a company gets to, like Home Credit, 200-300 million, and you have 20% of that, it's like 60, 70 million. If your fund size is, I don't know, 100, like one deal can return quite substantial part of your fund, right? So yeah, I would comment on that a little bit more, just, ownership at entry and making sure enough reserves to last multiple rounds, yeah.
Helen, did you have something to add from an investor's perspective?
Yeah, I think scale is definitely important if you're looking at IPO companies, right? So we look at like TAM, how big is this market? Because in Southeast Asia, there is a risk that you have a lower TAM. And then if you cannot go public, can you be acquired, right? I think when you think about acquisition, then some of the indicators on the metrics will be different because it is really about strategic fit, right, with the acquirer. So for example, if I talk to one of the big internet companies from China, they could be interested more in the breadth of the user base that the target has. If let's say it is a post-sales auto servicing network, then it's like your point of sales, right? Your outlets. Is it nationwide coverage, for example? So that is a bit different considerations when you think about, what is going to be the exit path. Yeah.
What about from the company's perspective, Abhijay? If you think about how to go beyond the non-IPO path.
Yeah, so I think, to be frank, companies think less about this than investors do. Our primary, day-to-day is really focused on building the business in the best possible way. I think, we've touched on the M&A side, more from, when companies choose to go down that path of selling rather than, going and doing a public listing. It's certainly something we are spending time on as a acquirer. Right, we've done M&A in the past. We think there's interesting M&A opportunities, in this market certainly, and that's where we, spend time thinking about how to grow our own footprint. And often, as Helen alluded to, it makes sense to buy as opposed to build because build can take a lot of time, particularly in markets where licensing is required. We operate in financial services. Everything has to come under a licensed entity. And buying is often a better way of, building up your overall story as opposed to simply going organically and going down that path. So I think that's where we tend to spend a lot of time, at least as a company.
So what do you have your eye on? I mean, this is the second question from the audience. How much scope is there for cross-border M&A in this year and the year ahead? So as acquirers, or potential acquirers, as it were.
Yeah, so look, I think we started in Indonesia. It's certainly our home market. It's where we have the biggest presence. Today, we also operate businesses in Vietnam, Philippines, and Thailand. And in both Philippines and Thailand, we've chosen to acquire as a way of entering the market as opposed to, building the business completely organically. Now, some of these acquisitions can be for licensing as opposed to buying, real large businesses, but that doesn't mean that, that can't happen in the future.
Yeah. So last question for you, really, Abhijay, is that, so in 2022, Kredivo's plans for a SPAC merger and eventual US IPO were scrapped. So what are your plans as a company? To stay private or not?
Yeah, so 2022 was an interesting time. As is publicly known, we went down the SPAC path because we thought that was an interesting way of raising a large amount of capital. We announced a PIPE, right? So we did a lot of work in terms of putting a very solid group of investors together who backed the company in its path towards a SPAC listing. But as we went through that regulatory process with the SEC in the US, during that time, from 2021 to 2022, the market changed. And it was pretty clear that whether you were a good or a bad company, as long as you had a SPAC label on you, you were being treated as a pretty poor company. And all of the statistics around redemption rates for SPACs, post-market performance for SPACs was pretty poor. And look, we're not a concept company with revenues expected to come 10 years later, right? This is a real business. We've been operating profitably for a while now. And we didn't think that that was a right outcome for investors, management, employees. So since then, we've chosen to stay private. We raised a private round a couple of years ago. The company is well capitalized. It's operating profitably. So yeah, no immediate plans that I can disclose.
Right. So thanks again to our panelists for this session. I hope you found it helpful. So now we'll make way for the last session. So thank you again.
And of course, that was a great discussion on fixing Southeast Asia's exit conundrum. Let's take a group photo, shall we? So of course, panelists step in front of the tables, nearer to the edge of the stage. Yes. That's right. And there is our cameraman in the center. Give him your biggest, brightest smile. And we've got it. Thank you so much to our wonderful panelists. For those of you who are still sitting at the back of the room, you can come in and take a seat. There's lots of empty seats in the first, second, and even the third rows. Right? Don't stand at the back and crowd near the entrance. All right? Just like to invite all those who are standing, just grab a seat. Make yourself comfortable for our final panel discussion, which is coming right up right now.